In this video, guys, let's explore how we could use a limit order only trading strategy. Stick around. Hey traders, warm welcome to you. Thank you for joining me. All right, so a limit order only strategy. Is it possible to do it, and how would we go about building a strategy that works on just limit orders? First of all, why would you want to use just limit orders? So this might be a time constraint thing. Not everyone can sit in front of the screen all day, every day. You don't always have the opportunity to capitalize on those trade ideas if you're not the screen. But a limit order is resting in the market and is going to trigger if that price is met. So in theory, you could kind of build a strategy based around that. Now, before we kind of dig down this rabbit hole, one thing to point out, maybe the pros and cons of doing this. Pro, obviously, just like I said, you don't have to be in front of the screen. You can put those limit orders in and you will find out how you've been filled and what the outcome of those trades when you do log in. However, the downside of that, and that sounds good, right? Because you're like, okay, I can get on and do other stuff, I have in front of the screen, great. But the downside of that is you are going to get filled at that level no matter what. Because the price is, well, I say if the price hits that level, you will be filled no matter what. So what I mean by that is if suddenly something comes out and news just goes straight through a limit, you're going to be filled on that limit. If it comes and what you're probably hoping for is the market just comes down, kisses your limit and rallies back up in the case of a long order. So you're not able to adjust your strategy on the fly. Now that might seem like a negative, and in a way it is, because if something crazy happens, the market changes phase and your position for that's you might be out of sync with in tune with stuff. But put it this way, if you are at the moment struggling with your trading, why not experiment with this and say, hey, you know what? I don't seem to have a good read anyway. I'm being frank. I don't seem to have a good read on what's going on, and I'm struggling to adapt. So why don't I go back to basics and use a just limit order strategy and just see what happens and just see what the outcome is. And so how could you deploy this and what sort of thing would you do? So let me give you an example. Now, obviously, you've got two types of limits. You've got a stop entry, which is effectively it's not a limit order, but it gets you into the market. Let's assume that you're not in the trade at the moment. A stop entry order says, hey, if the price goes above this level, then get me long here. So it's a stop, but it's an entry order in. So if it's a buy stop, and because you've got no position on it, will get you into the trade. So that's a continuation type trade. Another one would be just a standard limit order, which we all know and love, which would sit there, and let's say that's at 57 bucks. You have a limit order at 57 bucks. Price comes down, trades through, at or through 57 bucks, you're gonna get filled. And let's say this was 60 bucks here, use a kind of actual example. If you've got a buy stop entry order, as price goes up, it would only trigger a long if it traded at or through 60 bucks. Okay, so two ways of getting in, at highs, at lows. How would you use this? And so one thing you could do is you could say, right, I am going to assess, let's use an example that you want to trade one intraday trade. Okay, you want to pick one good trade of the day. And so you might look at the prior day's trade, and let's say the prior day has done this, right? And there is the close. Okay, imagine that's the close on the day, and you're like, okay, I'm going to now try to come up with some kind of limit order strategy based on that. Two things you could do. You might say, right, hey, I'm expecting the second day to be a kind of inside day. And this really is the key, is to have a hypothesis of what you expect the day. How do you expect that day to look on a daily chart? So imagine your daily chart might, from a candlestick perspective, maybe it looks like that. You're like, okay, what's tomorrow gonna look like? Am I expecting it to be this? You know, am I expecting it to be another doji? Am I expecting it to be, something with a big tail to the downside? I know this is like easier said than done, and obviously if you do this, it would be easy, right? Trading is not it. But I find that when you kind of look at the bigger picture on the daily chart and go, what could the next what could it look like? And clues on that might be, hey, if we've broken out and failed, maybe we're in for a big selling day today. Maybe we're in for that kind of move today. Or maybe we've broken out and now we're stagnating and we're kind of in an oscillatory range environment. Maybe we are gonna have an inside day. So your thesis and your prediction is based on the chart pattern. You're not just guessing, you're kind of saying, hey, what's built up so far? What was the preceding price action? How have we got to this point? What am I now expecting? And then from there, you say, okay, if I'm expecting, let's say, 2 different types of candles, how would I position for those? What would they look like and how might they look intraday? So you're reverse engineering your expectations on the higher time frame intraday. And you say, right, okay, I think that actually we may well, because let's say the prior day had kind of done this, right? And you've broken here, and let's imagine that. Hopefully you can just see that. So I'm making this up as I go along, but you get the point, right? Let's imagine that it's broken that high and it ended up closing through the low, but breaking the low, but closing just above the low. You might say, you know what? This is probably a trade that's going to put in or close at lows. I'm expecting this to probably close at lows. It might test some highs, not real breakout territory yet, but as we've broken through this high and failed and broke through that low, we've come back up, but I still think that maybe we're going to kind of put in one of these solid red candles. And again, hypothesis depending on what you're considering. So how would you do that? You could say to yourself, right, okay, I am going to look to sell an initial pop off the open. So you might end up putting a limit order here, let's say halfway between the closing price and the high, as an example. You might say, hey, I'm going to sell through the lows, so I'm going to put a sell stop order here to get me into the trade here. You might think, hey, well, I'm going to have one more test of the highs and then we're going to roll over. So maybe you put your limit order in here. The idea is, okay, who knows which is the one you pick, but the idea is that you're trying to show how you expect the candle to form with your trade ideas. So if you have the expectation of, hey, I think we're in a heavy down day, you might have to just sell through the prior low and put the order in that sells through there, and then put an accompanying stop to manage the risk on that. If you think we're gonna have an outside type day, you might wanna say, hey, well, I'll put a limit order of the highs and I'll put a limit order of the lows, and maybe one cancels the other out. The point is you try to structure the trade around what you perceive may be the price action, and you look in as well to the time of day that price does stuff. So if you have an opening drive and you have a kind of chopping environment, maybe sometimes the price tends to move to highs towards the end of the day, maybe it's coming in closing at lows. How are you going to position? So you can then go, right, actually I'm going to put a limit order in that goes in and is cancelled by the first hour of the trading day. Okay, you can put that. Most orders go in as a default of good till cancel, but some of them you can have them cancelled at a specific time. So you can leave that limit order resting and kind of say, hey, if we get this extension above the high or above the low in the first trading hour, I want it, I want to get in. But if it's kind of at the end of the day, I don't want it. And so this is a way of being able to manage that feeling and that idea, that trade idea. It's like, hey, if we get that extension, get me in. If not, cancel the order. And you can also, play around with these different things. But I think the key here, guys, is to really think about how the daily chart is going to look. Visualize that and say, right, and yes, this is a skill you've got to develop, right? So you're looking at the chart saying, okay, yeah, we could easily test that high. Man, this is a breakout type thing now. I want to get long straight on this. I want to do short. I want to do whatever it is. And then structure the limit around that. Attach a stop loss to that limit so that you are protected in some way. And the extra crucial part that I think is very, very crucial is to recognize how long you want to hold that trade for, because limits all very well to get you in, and this will be effective at getting you into the market at the level you want, but how do you then get out of the trade at the level you want? One thing you might have to do is set an alert that gets fired to your phone if you're not the screen says, hey, you're in the trade, and then set a timer. And so often one thing you can do is, hey, I've been filled on that, the alert comes to your phone, ding, you've been filled, great. Now you go to your phone's time and you say, hey, I expect, and this is you aligning with conditions, that this is going to run my direction for an hour. For example, 2 hours, 3 hours, whatever it may be. Set your timer, and so you're not looking at the chart per se. You know that the risk is taken care of, right? You've got the limit in, the stop is in, you've been filled, the stop's in, that's what's taken care of. That was done before the trading day. That's all set. You've now been filled, you're in the market. You don't want to leave that, just randomly leave it. And okay, targets are fine. And I think bracketing is one thing that's kind of a very simple thing to do, is to have a bracket and say, hey, I expect this. And that's one way of doing it. But another way to do it is to then set a timer and say, right, after an hour, I'm going to close this trade, because the expectation of this trade is we are testing highs and we're going to roll over for an hour. We might then retest again, but I want to take that out. I want to take it out. So I'm either going to come out at an alert level that I set that's maybe a midpoint or a VWAP or whatever it is, or I want to come out after an hour. So you've got that time-based exit strategy, as well as potentially a key level, maybe a bracket order, or maybe an alert that says, hey, I want to come out at this price as well. So limit order only strategy, re-engineering or reverse engineering how that daily chart could look on the high probability days that you think you've got an edge on that. How would that look intraday? Where would be the best place to structure that? What time would you want to get filled on that? Where would you place the stop on that? How long would you expect the trade to run for if it was working? Work it all out, plan it all out, put your orders in, manage the risk, and then you've got a nice, potentially a nice little strategy that you have to sit in front of the screen all day long for. Take care, see you next one. Keep the risk managed. Bye bye.